Another big story of the day, we got some housing data out this morning. U.S. home sales falling for the seventh month in a row. They declined by 3.7% during the month. So we want to talk about this and what this means for the housing sector. And for that, let's bring in Tendayi Kapfidze. He is the chief economist at LendingTree. And Tendayi, it's great to see you again. When we have this report that we got out this morning, the second month in a row of declines for U.S. housing sales, is that all due to a supply, or is there something else also that's playing into this?
I think it's a combination of, lack of supply and slightly higher mortgage rates, which may be depressing activity just a little bit. But supply is the big story. There are only just over 1 million homes available for sale in the United States, and that translates into about 2 months of supply or 2 months of sales. In a balanced market, historically, you've expected to see about 6 months worth of supply. So you could say we have about a third of the level of supply that you'd want to see for a balanced or a healthy market.
When you look at that supply, Tendayi, and by the way, it's great to see you after so many weeks, but when you look at that level of supply and the median sale price in March being around $329,000, it doesn't look like prices, even if this is a bubble that were to pop, it doesn't look like prices would come down, or would they?
Yeah, I don't think prices would necessarily come down, but I think certainly if you look at the year-over-year price increase, which for this month was about 17%, that really is a pace of increases that I think is unsustainable. There's a couple of things going on as well with these large price increases. The number that's reported is the median price, so it really matters the mix of homes that are selling. And what we're seeing is that supply is most constrained at the lower end or lower value homes. And there's a lot more supply and a lot more activity at the higher end of the market, homes over 750,000, homes over $1 million. So that is also pulling that median home price up. But yeah, certainly, even if we were to see a slowdown in the housing market, I don't think you would necessarily see price declines, just slower price increases.
Tendayi, we're seeing more and more people get vaccinated, leading to larger economic re-engagement here over the last several weeks. Is that expected to help, or at least, I guess, alleviate some of the pressure on the supply issue of this? Are we expecting more homes to come onto the market as a result?
Yeah, I think, if you think about it logically, as more people get vaccinated and the levels of new infections start to decline, maybe some people who are not comfortable with having people visit their houses will get more comfortable and maybe will put their house on the market. There's no data, though, that we can refer to that would help us answer this question. There's just maybe an expectation based on changes that we're seeing in terms of activity in all other parts of the economy, where there's a lot more people doing activities that are outside of the home activities. So, for example, car lots or, people sell cars have been seeing a lot more traffic, a lot more sales over the past 1 or 2 months than they were, during the worst months of the pandemic. So that's something that suggests that maybe you'll get a few more homes onto the market, ease that supply pressure a little bit. But I still think that you will still have significant, kind of bidding wars and people really having a hard time finding homes that are available for sale.
Not only does it seem like people who are middle class or lower income getting locked out because of the price, but it doesn't look so good for people at the other end, because with this proposal to raise the capital gains tax, wouldn't that have a potential impact on the higher end of the market?
Yeah, I think it's certainly something that might have an impact, once it's initiated or once it's put into place. But I think for this year, it might actually have a different impact. I've seen some analysis suggesting that if you're concerned that the capital gains tax is going to increase, then maybe you take some of your capital gains now before the capital gains tax increases, which means you have more funds to put into other types of investments, such as real estate. And if we look at the top end of the market, consumers or households have about $2 trillion in excess savings over the past year versus where they would have been. This is from a combination of less economic activity and some of this stimulus money. So the high end has a lot of cash. This proposal around capital gains tax could put more cash into the high end of the marketplace and could actually drive more sales this year and bid prices at the high end further up.
Tendayi Kapfidze, always great to have you on Yahoo Finance. Thanks so much for hopping on here, and we will talk to you again soon.